Welcome to Business Mondays at the Urban Farmhouse. I'm Renee Fisher with VACO, and I'm here today with Conrad Garcia with Mullen. Thank you so much for being here today, Conrad.
Thank you for having me. I
We appreciate it. Well, the topic today it's a little bit of an unusual topic. It is holding hands as we approach the fiscal cliff. And we have various people that we're talking to explain this. And with Conrad, I wanted to talk with you, Conrad, a little bit more about what you're seeing in corporate America. But first off, can you tell me a little bit about your key position and the things that you handle at Williams Mullen?
Sure. I am a tax partner at Williams Mullen, and my specialty is mergers and acquisitions, formation of companies, and trying to mitigate the cost of businesses to reduce their income tax expenses. We do it through a variety of ways, structuring techniques, using compensation. Given the complexity with the code, there are many ways and many techniques that you can use to reduce your current income taxes. Also, when you're forming businesses, what type of businesses should you form, so that we always have to look down the road of when you sell the business. And probably the biggest and most important decision that you see with businesses is when they want to sell or merge, and why business terms should dictate that deal. The reality is the tax consequences may make one structure significantly better than another in terms of tax dollars, so that the parties can achieve their economic goals and their business objectives.
So every day is a new day recently for you, huh?
It has been a new day. The last end of 2012 was very busy, and it was all based on tax rates and what we're talking about today.
Exactly. So what are the issues that corporate America are facing with the new tax cut and the impending budget? Tell us a little bit about that.
I think businesses, what you saw prior to the extension of the tax provisions and the Bush tax cuts, as we'll say, and some of the changes made permanent,
right,
is I think it's you got to understand that to see what businesses. We had several businesses that, commencing in October and November, decided that there was so much uncertainty they would just sell their businesses. And we're talking businesses where the values range from $5 million to 150 or 200 million, and all of it was they did not want to deal with the uncertainty, nor with the tax increases, where people were betting that the long-term capital gain rate would go from 15 to 20%, and then as part of the new Healthcare Act, there's a new 3.8 investment tax, which in reality causes an 8.8 increase in the taxes. So what you saw was those types of taxes caused a lot of businesses to say, it's probably better for me to sell at this point in time when there is certainty and just get out of the business, or I want to cash out and at least I know what money I'm taking home. Now, you had the extension, and
right,
what the extension did for these businesses is, for those that didn't sell or those that are in it, they're looking at it, and while you have tax certainty with respect to rates, one thing that you do have sort of this discomfort is that the political parties in Washington, you have one side that thinks that to adjust the budget there needs to be more revenue enhancers, while another side believes it's just going to be budget cuts. And revenue enhancement are additional taxes. So businesses are sitting on their heels, and you get a call, well, do you think this is going to go through? And your answer is, I know about as well as you do.
Right.
So what you're seeing are, for those businesses that have not sold and are continuing to operate, they're looking for ways to reduce the rates. If you have, many of the businesses, large or small, are held to what we call pass-through entities, which are S corporations and partnerships. So that income they make flows up, and if you make more than $450,000, you have 39.6% of your money is subject to taxation, rather than 35. So that's a 4% difference. So the question is, what things can I do to make up for that spread? So businesses is there deferred compensation? What should I restructure in my business? Do I go buy assets that I can depreciate further?
Right.
Things that you can do to look at income. And then there's also another part of the business world that is totally dependent on government contracting, and their concern is that when sequestration hits on March 1st, their concern are the contracts going to continue to be out there, and if not, can they change their business and get their product to a new type of industry? And from a legal sort of business prospect, what can they do to, in the future, should they protest contract awards or things that you can do administratively to hopefully keep your government contract? So it's a little bit different than what we're seeing.
Wow. What about, when you just mentioned companies will have to look at internally the things that they can do to build their company instead of having the revenue flow out or the income flow out. Would you think that for 2013 you will see companies building internally, building up their technology, building up their infrastructure, reinvesting the money more so?
I think what you're seeing is they're going to have to do all of that, but with like the same amount of money, they have to just become more efficient. You got to pick certain things in your business and say, this is what I'm focusing on to grow my business, and the other items become more of a luxury. And if it's revenue, what can I do to enhance my revenue? What do I need to hire? And maybe there's certain other positions or other departments that don't get that attention, or we won't rehire someone in that area. We'll go to a different division if necessary.
Okay. So when a company is calling Conrad, ring, 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 Conrad, I'm going crazy over here, I'm stressed about what's going to happen, my company's barely making money as it is, I want to make sure that I'm handling things appropriately. What are and I know I just threw a bunch of things at you right there,
sure.
But you probably get those frantic calls. Can you give me an example of a frantic call and how you handled that call?
I think
you could help them?
I think the call is, Conrad, I think I have a good business plan, but when I look at my financials, and at that point it's not the financials, it's the tax stuff is irrelevant, I've got these, I know I have my tax obligations, but I'm not making money, or something's just not adding up properly, Conrad.
Okay.
I've got this huge tax liability, but yet I don't see this revenue in my pocket or inside the business. And at that point, what I do is send me your cash flow statements, send me your financial statements, and let's sit down and have a talk about where's money coming from, where's it going out. Let's look at your old tax returns, what are you doing and why are you doing it? And usually when you sit down and do those types of things, you can look and say, well, have you thought about maybe buying equipment and expensing it, right away? Maybe that's a good improvement. Or some things as easy, if you looked at your meals and entertainment expenses and why are they up 15 or 20%? Do you have enough controls on your employees? It's those types of things that, while they sound simple, when you have 4 or 5 things that add up, it's a big problem. What you try and do is peel it back. And at that point, most people don't want to spend money on a lawyer. And I would say, if it's not a lawyer, go find a business advisor. Sometimes you need a third person to come in and look at objectively what's going on. And don't, the tough part in being an advisor is you also have to be a counselor and say, look, I'm going to ask you something. Have you ever considered X? And at that point, it may, or you say something offensive, it's like, why is this happening? But sometimes that's really good. It helps people grow. So it's those types of calls. And the other call that you're seeing is, I want to sell my business now. How can I reduce the taxes? I mean, Conrad, this is...
Was it December 20th that you were getting those calls, right?
This December was just bad. So
I know. I can only imagine. I can only imagine. So one last thing, Conrad, we've been talking a lot about business. Give us a funny unknown fact about you and something that maybe people wouldn't know about you.
Not too long ago, I used to do Bikram yoga to help reduce my stress, and I find it very relieving if you do it. So
nice. Yoga. That is the tip of the day outside of taxes. So with that, I want to thank you, Conrad, for being here today.
Thank you very much.
It was a pleasure.
I appreciate it.
And I am Renee Fisher, signing off at Business Mondays at the Urban Farmhouse.
Thank you.